When you want to make money, the first thing that comes to your mind is to increase your salary, which is the amount of money you get from your job every single month. But there's also another major way to increase your income. It is through investments. There are many things you can invest in. You can invest in real estate, or you can invest in collectibles like art, which infamously go up in value over the years. But the most general and available way for everyone to invest is through stocks. Companies have been going up throughout these years, so why shouldn't you join in the fun as well? But in that case, there comes volatility and with it, risk. While trying to build wealth, you can end up losing all your fortune in one go because of one wrong decision. So unless you are skilled at assessing companies and reading balance sheets, you're likely to lose money. But you should not worry about that, because exactly for that, the concept of diversification was introduced. What it means that you will invest part of your wealth in many companies at once so as to decrease the likelihood of you losing money. But this has already been done for you in the forms of index funds. An index fund is a collection of individual stocks in one package. These stocks are from various different companies. So when you're investing in an index fund, you're basically investing in all of those underlying companies by giving each of them parts of your wealth, such that when one company goes down, it is more likely that there will be another company which will compensate for such losses, and hence making you money long term. Popular index funds include Nasdaq, Dow Jones Industrial Average, and the infamous S&P 500. I prefer the S&P 500 because it gives you the perfect balance of risk and reward. But because you are sacrificing profit for less risk, your growth rate will be lower and hence may take decades for you to become a millionaire. For example, if you begin with $100 in S&P 500, which returns 8% per year if we exclude the inflation rate, and say you deposit $300 every single month, it will take you 41 years to cross $1 million. That's a lot of time. So now, how is it that you make money faster? You have to keep it in a way which is sustainable and you do not risk losing it all. The S&P 500 is still perfect for such a job. And on the flip side, if you want to turn low amounts of money into higher amounts, you need to invest in far riskier stocks. Or maybe you can get into options trading. So we have on our hands two methods to make money using stock investments. One is to play it safe and make it sustainable. Other one is to take more risk but then make more profit. So it makes sense that a perfect solution can be to combine both. Here's how. What you can do is invest in S&P 500 and make that your net worth, meaning your actual worth would be based off of an index fund, which is less risk but more sustainable. And you have to make sure that you do not touch this money unless very necessary. And from here you can use a very small but limited amount of money to invest in far riskier stocks, like options or perhaps stocks from new companies, which either can go very up or completely fall to nothing. Here's an example. Imagine you have $200,000 in S&P 500. That year you will make 8% or $16,000. Then from that you can take only $3,000 to invest in very risky stocks. Or you can take that $3,000 from your income source. Now let's say this $3,000 became $6,000 within 1 year. Then you can reinvest back into the S&P 500 and make it $219,000 versus the $216,000 which you would have if you didn't invest that $3,000 into a far riskier stock. This may look like it's pretty small, but it actually adds up really quick. And then you can repeat this over and over, taking $3,000 and making money from that. Now even if you lost the money, it would still be a small hit and you would have made more money than you had anyway. The control that you will have is how you can make profits with that $3,000 through investing in risky stocks. If you get more and more skilled in assessing companies and investing in good companies, you will be adding more to your wealth every single time. That said, investing only in highly risky stocks isn't your only option. Another and arguably better option is investing in your own income, which means you can get better at whatever you do and so you can charge more money. Or you can stockpile that money into another index fund using which you can start your side business. For example, maybe you want to be an artist, so you invest in an iPad or perhaps a drawing tablet. You can create a portfolio and use some money to build connections and commercials. With some time, you can start earning money from your side hustle as well, which will mostly add to your wealth index fund. Or you can use that money to get your real estate license or use it as a down payment for a house that you will sell. The list goes on. To sum it up, most of your wealth will go to an S&P 500 index fund, which is far less risky and is more sustainable, and you will take some money from there and invest in your income such that you can increase your income, which you will then use to again increase your net worth. Doing this continuously will ensure that you make more and more money. I hope this video helped you. If you liked this video, then please drop a like button. And with that said, thank you for watching. I'll see you guys next time.